Okay, dear students, let's just start an extremely important topic that is relating to pension. In our taxation paper, one is occupational pension plan. Occupational pension plan. Occupational pension plan, obviously taxation. Occupational pension plan. Occupational pension plan means when someone is an employee and his or her employer is running this occupational pension plan, when employee contributes in occupational pension plan, such a contribution will reduce employment income for that individual. Occupational pension plan contribution by the employee reduces employment income for that employee. Personal pension contribution. When an individual contributes in personal pension plan, like for example, individual has taken an insurance policy. Number one, contribution in PPC is not the expense for that person. For example, I am an employee, I am contributing for myself in PPC. So my contribution in personal pension plan will not reduce my employment income. In case of PPC, what happens? Whatever individual has contributed, it is treated as 80%, 20% is paid by HMRC. Second, basic and higher rate band, both will increase by gross PPC. Third, we know that gross PPC also reduces your adjusted net income. Okay, now, very important area is annual allowance. This is very important. Annual allowance for the pension. How much an individual can contribute in pensions? You can contribute as much as you want, but HMRC has given the annual allowance limit. Now, what is the objective of that limit? We are going to discuss. Annual allowance limit is £40,000 for the pension. Annual allowance limit is £40,000. Now the question is, number one question is, how this limit will be utilized? How this limit will be utilized? This is the one question. Second question, if someone has contributed less than 40,000, so what will be done with that? And if someone has contributed more than 40,000, then what will happen? Number one, this annual allowance limit will be utilized maximum with what sort of contributions? Less, let's say, employees contribution, in occupational pension plan. If employees contributing in occupational pension plan, employees gross personal pension contribution, employees gross PPC of employee. There's a possibility that your employer is very nice towards you, and let's say the employer is also contributing for you. If employer is contributing for you in occupational pension plan, and let's say maybe in PPC as well, number one is when employer contributes for employee, that is an exempt benefit for the employee. Okay. But employer's contribution also consumes this annual allowance limit. So less employer's contribution. Now, either employer is contributing in OPPC or PPC or even both? Deduct. Now, final answer. Assuming the final answer is positive 10,000. Assuming the final answer is positive 10,000. If the final answer is positive 10,000, so it means this 10,000 is unused. Unused annual allowance is carried forward for 3 tax years. Repeat. Unused annual allowance. This is simply unused annual allowance, and that is carried forward. Unused annual allowance is carried forward for 3 tax years. Unused annual allowance is carried forward for 3 tax years and used on FIFO basis. Unused annual allowance is carried forward for 3 tax years and used on P4 or FIFO basis. Now, there's one more point. Let's say we are solving a question for the tax year 2023 and 24. This is my current tax year. Fine. So what is the rule? Now listen carefully. Always annual allowance of the current tax year will be used first. After that, we'll see that do we have any unused annual allowance? If yes, then that unused annual allowance will be used on FIFO basis. So the rule is annual allowance for the current year is used first. Annual allowance for the current year is used first. After that, what are we going to do? Then the annual allowance of earlier year. Obviously, I'm talking about unused annual allowance. So annual allowance of earlier years is starting with the earliest tax year, that is on FIFO basis. Starting with the earliest year. For example, the current tax year is 2023-24. If I just go carry back for 3 tax years, look at this. 22-23, 21-22, and 2021. Okay. Let's say we also have 1920. Now, this is the current tax year. Let's say you are solving a question. Current tax year annual allowance limit is 40,000. Now, we will add unused limits of the previous 3 tax years. So let us first count the previous 3 tax year from the current year. Can I say previous 3 tax years? Previous 3 tax year means 1, I'm just counting the previous, okay? 2 and 3. So number 1, whatever is unused limit, whatever unused limit of the annual allowance we have in 1920, whatever unused annual allowance limit we have in 1920, that cannot be used. That cannot be used in the tax year 23-24. Why? Because the maximum time period is 3 years. So unused amount of 1920 cannot be utilized. This is the concept number 1, the rule number 1. The second is, let's say unused annual allowance in 2021 we have 10,000. Assuming unused annual allowance in 21-22 we have, I'm just assuming we have 2,000. Unused annual allowance of 2023, we have nothing. This is the scenario. Okay. Just assuming in the current year, this individual wants to contribute. Again, assumption, the maximum contribution in 23-24 is 50,000. How much it is? 50. In the current tax year, the maximum contribution is 23. In the 23-24 is 50. Now, how we will use this 50,000? Try to understand. First, current year annual allowance limit will be used. After that, logically we'll go back to 3 tax years, 1, 2, and 3. And FIFO means, can I say we'll first use the unused limit of 2021. After that, we'll use the unused limit of 21-22. And if still, if we have any unused limit in 22-23, we'll use that. So if this is the question, an examiner is asked you in a multiple choice question, for example, that still how much annual allowance will be unused. Can I say then answer will be 2,000. 2,000 will be still unused. Why? Because in the current tax year, individual has contributed, total contribution is 50,000. First, the current year annual allowance limit will be utilized, which is 50,000. After that, we'll go 3 tax year back. But how do we use unused limit of previous 3 tax year? Can I say on FIFO basis? So in that case, still this 2,000 will be unused. Students, is this clear to everyone? Please just reply. The rule is first you have to use the current year annual allowance limit. First, you have to use the current year annual allowance limit. Then go 3 years back, only 3 years. And after that, you will use the unused limits on FIFO basis or whatever you say, FIFO basis. So let me repeat. First, unused limit of the current tax year. First, we will use current year annual allowance limit. After that, we will go 3 tax year back from the current year. And third step is utilize the unused limit of the previous 3 tax years on FIFO basis. Fine. Now, a very important concept is the rule is for pension, the annual allowance limit is 40,000. For pension, annual allowance limit is 40,000. But when 2 conditions are met, how many? When 2 conditions are met, then annual allowance limit, of 40,000 will also reduce. Repeat. How many conditions should be met? 2. Now let me explain. Condition number 1 is threshold income. When threshold income is more than 200,000, and the second is adjusted income. Adjusted income is more than 2,40,000. When both the conditions are met, when threshold income is more than 200,000, adjusted income is more than 2,40,000, then your annual allowance limit will reduce. Now, please listen to me carefully. The format of the threshold income is simply your ANI, simply your adjusted net income. But in taxation, threshold income rule is not examinable. Repeat. There are two conditions. If both of them are met, your annual allowance 40,000 limit will be reduced. Second, what are those conditions? Number one is threshold income is like your ANI, adjusted net income. But please let me repeat again for you. Threshold income rule is not examinable in the topic of pension in taxation. So it means, dear students, you people will be just focusing on adjusted income. If adjusted income exceeds 2,40,000, if adjusted income exceeds 2,40,000, then your annual allowance limit will be reduced. Now the question is, what is the format for the adjusted income? Listen. Number one, we'll take the net income. Obviously, examiner will give you the data. Net income. In this net income, simply add employees' contribution in occupational pension plan. Add employees' contribution in occupational pension plan. Add employer's contribution to any scheme for that individual. If employer is contributing in occupational pension plan for the employee, if employer is contributing in PPC for the employee, add. So add employer's contribution. Add employer's contribution to any scheme for that individual for whom we are solving the question. For that individual. So the final answer is adjusted income. The name is adjusted income. Now please listen to me carefully. If instead of adjusted income, if someone is using the word total adjusted income, that is acceptable. As far as your format is okay, your format is correct. Due to writing total adjusted income you will not lose any marks. But if you ask me, you should use the word adjusted income, but using total adjusted income, there is no issue at all. As far as your format is good, your format is accurate, you will get marks. Now listen carefully. When adjusted income exceeds 2,40,000, when adjusted income exceeds 2,40,000, then annual allowance limit will reduce. Now listen. Annual allowance limit is £40,000 less adjusted income minus 2,40,000. Either take 50% or 1/2, it's the same thing. Just okay. For example, we know that annual allowance is £40,000. And let's say someone is having adjusted income 3 lakh. Someone is having adjusted income 3 lakh minus 240 into 50%. So we'll get 30,000. Am I right? So this individual in the current tax year, instead of 40,000 annual allowance, will get 10,000 annual allowance. One more example. Let's say individual is obviously annual allowance limit is 40. Assuming that individual is having adjusted income 3,12,000 minus 240 fixed for the formula into 50%, I'm getting 36,000. So annual allowance is 4,000. Third, annual allowance is 40,000. Assuming individual is having adjusted net income, adjusted income 4 lakh. Assuming individual is having adjusted income 4 lakh minus 240 into 50%. 400,000 minus 240 will give you 1,60,000. If you take 50% of that, it comes 80. But look at this, what I'm writing. I'm writing 36,000. Now listen. What is the interpretation of this hysteric? We'll say annual allowance cannot go below 4,000 pounds. Annual allowance cannot go below 4,000 pounds. At least individual will get 4,000 pounds no matter. The minimum annual allowance, at least 4,000 everyone will get. Mathematically, even though 80,000 is coming, but we cannot write 80 because annual allowance limit cannot be 0. The minimum annual allowance limit is 4,000 pounds. We did discuss that personal allowance can be 0. Personal allowance can be 0, but annual allowance cannot be 0. Another thing is, when adjusted income is mathematically greater than equal to 3,12,000. When adjusted income is greater than equal to 3,12,000, then annual allowance will be only 4,000. When adjusted income is 3,12,000 or more than that, then annual allowance will be 4,000. Now, one more rule. We know that, let's come here so that you should compare this. Remember, there was unused annual allowance 10,000. We said if there is any unused annual allowance, it will be carried forward for 3 tax years, used on FIFO basis. There's one more possibility. What is that possibility? Annual allowance is obviously 40,000. Let's say we deducted the employee contribution in OPPC, gross PPC by employee, employer contribution. Assuming this total which we are deducting is 60,000. Try to understand. The contribution of employee and employer, that is 60, but the limit is 40. If total contribution in different pensions or even a single pension is more than 40,000, then mathematically you will have a negative answer. Am I right? Negative 20. Mathematically, obviously, when I deduct 60 from the 40, I'll get negative 20,000. Whenever contribution is more than the annual allowance limit, whatever the difference comes, the name for that difference is annual allowance charge. What is the name? Annual allowance charge. Let me write here. When pension contributions, I'm talking about total pension contribution, is more than annual allowance, the difference is annual allowance charge. Now listen, logically this annual allowance charge, this annual allowance charge is treated as your other income. Other income means as non-saving income. This is your annual allowance charge, and this annual allowance charge is logically treated as your other income. It is treated as other income, non-saving income, and you have to pay tax. An applicable tax rate will be from the non-saving income. So when pension contribution exceeds annual allowance limit, when pension contribution exceeds annual allowance limit, the technical name for that is annual allowance charge. Logically, that annual allowance charge is treated as other income, as non-saving income, and we will apply tax rates from the non-saving income. So you should know one thing. If there is unused annual allowance limit, it will be carried forward for 3 tax years, used on FIFO basis. If you have contributed more than the annual allowance limit, there will be annual allowance charge, which is treated as other income, non-saving income. And obviously, applicable tax rate will be from the non-saving income. Now, let's come here. Let's say salary of Mr. Y is 2,03,000. Salary of Mr. Y is 2,03,000. Property income is 92,000. Current tax year is 23-24. Okay. Salary of Y is 2,03,000. Property income is 92,000. Tax year and gross PPC. 22-23. Gross PPC is 30,000. 21-22. Gross PPC is 25,000. 2021 gross PPC is, let's say, 40,000. 19-20 gross PPC is 20,000. In current tax year, Mr. Y contributed. In the current tax year, Mr. Y contributed 90,000 gross PPC required. Income tax liability. Please, I want everyone to attempt this question. I'm giving you around 8 to 9 minutes. I hope everyone can see the question. The current tax year is 23-24. Salary of Mr. Y is 2,03,000. Property income is 92,000. Tax years and gross PPC. In the current tax year, Mr. Y contributed how much? 90,000 gross PPC. You are required to calculate income tax liability. Please take even 10 minutes, but I want everyone with complete honesty attempt this question. Everyone, please, you have 10 minutes to do it. Yes, current year gross PPC is 90. It's written 90,000. Current year gross PPC is 90. Okay, students, now I hope you people have attempted. I want everyone to focus now, please. Obviously, salary as well as property income, both are gonna say non-saving incomes. Let's say there's no other information, so salary is the only employment income. Given in this question, 2,03,000. We do have a property income as well, which is 92,000. So the net income is 2,95,000. The net income is 2,95,000. Now for personal allowance, we have to check either we are getting the personal allowance or not. Working one. We need to calculate adjusted net income, ANI. Net income is 2,95,000 less gross PPC. which is 90,000. Adjusted net income is 2,05,000. Students, if you recall, we have revised that previously as well. Whenever adjusted net income is greater than equal to 1,25,140, personal allowance becomes 0. So here this individual is not getting any personal allowance. Entire income becomes the taxable income, which is 2,95,000. Fine. Now we need to calculate income tax on that. Look at this. Basic rate band, higher rate band. The normal limit of the basic rate band is 37,700. Higher rate band is 1,25,140. Okay. Now, these limits will be increased by gross PPC. But there's no need to go directly and increase them with the gross PPC. If you just recall the format, we have discussed that as well previously in our live revision classes. Actually, bands will increase. Bands will increase, lower off. Gross PPC, which is 90,000 in our question, and total of the relevant earnings. Students, relevant earnings are employment income number 1, income from the furnished holiday letting number 2, trading profit trading income number 3. In this question, we only have the relevant earning is employment income, which is employment income. Look at this. Higher of one is 3,600 and total of the relevant earnings, which is only 3,000 employment income. We do not have any income from furnished holiday letting. We do not have any trading income. So higher of 3,600 and 2,03,000, obviously it is 2,03,000. Now lower of, your bands will increase by lower of gross PPC and 2,03,000. So obviously gross PPC 90,000 and 90. So basic rate band limit will be 37,700 plus 90,000. It is 1,27,700. And higher rate band limit will be now 2,25,000. 99. Just a minute. 15. 1,25,140 plus 90. 2,15,140. 2,15,140. Now let's apply. 1,27,700 into, can I say 20%? 1,27,700 into 20%. I'm getting 25,540. Your taxable income is 2,95,000. So far, we have only calculated the tax on 1,27,700. Now listen. High rate band is ending on 2,15,140, and the taxable income is even more than the high rate band. It means now what I'm going to do, I'll take 2,15,140 minus 1,27,700. So 2,15,140 minus 1,27,700. That is 87,440. That falls in high rate band into 40%. I'm getting, students, 34,976. Let's recheck. 87,440 into 40%. Yes. Now The taxable income is 2,95,000. We have actually taxed the total income so far 2,15,140. Now, whatever comes, that will fall in additional rate, and where tax rate is 45%. 2,15,140. Students, I'm getting 79,860 into 45%. I'm getting 35,937. Now we have to check relating to annual allowance. Either the contribution is more than the limit, less than the limit. Let's check that now. Come to the question. Come to the question. Number one, if I just show you the unused limits, can I say if 30,000 is gross PPC, can I say then logically the unused is 10,000? Am I right? 21, 22, if gross PPC is 25, then unused is nothing unused. Can I say here we do have unused, but it is irrelevant for us? Students, can anyone reply? Why unused of 1920 we are not considering here? Why unused? Because maximum 3 years. From the current year, we can maximum go 3 tax year back, and then we use unused limits on FIFO basis. 1920 does not fall within previous 3 tax years. Okay. FIFO basis means logically, I'm just explaining the FIFO basis again. Logically, you should be using 2021 unused limit first, which we don't have. Then 21, 22, and then 22. This is the meaning of FIFO. But we also know one rule. Always first current year annual allowance will be used. Always first current year annual allowance limit will be used. After that, we will go 3 tax year back and use unused limits on FIFO basis. Okay. Now, let me show you working. Let's say working 2. Working 2. The net income of this individual is 2,95,000. Students, please listen carefully. Add employees' contribution in occupational pension plan. It is 0. There's no such thing. Add employer's contribution in any plan. There's nothing. It means net income is your adjusted income. Am I right? Net income is your adjusted income, which is 2,95,000. This 295 is more than 2,40,000. Since it is more than 240, then what happens in the current tax year? Students, annual allowance for the current tax year is 40,000. It will reduce. Why it will reduce? Because adjusted income is more than 240. Less 2,95,000 minus 240 and take the 50% of that. So 295 minus 2,40,000, 27,500. So logically in the current year, students, this individual in the current year will not have an entire 40,000 annual allowance limit, will have only 12,500. I hope it is clear to everyone. Now, in this annual allowance, 12,500 will add unused annual allowance Come here. 2021, it is 0. Just to show you, otherwise we could have done directly. 21, 22 is 15 and then 10. Maximum. Logically, maximum available limit, I'm saying maximum available limit with this individual is only 37,500. This is the maximum limit. And I want to say something. Please listen to me carefully. If this individual contributes only 37,500 in the gross PPC, only 37,500, then there will be no annual allowance charge. Repeat. If this individual contributes only maximum contribution is, if the maximum contribution is equal to 37,500, then no annual allowance charge. But can I say here, his contribution is more than 37,500. So definitely what comes? Annual allowance charge will arise. That is 90,000 minus 37,500. That is 90,000 minus 37,500. Students, I'm getting 52,500 annual allowance charge. This is working, let's say 2. Let's take it entire thing in working 2. Annual allowance charge is 52,500, and as I mentioned earlier, annual allowance charge is treated as other income, non-saving income. And we have already utilized basic rate band, higher rate band. Now we are in additional rate band. So how much we will apply on this 52,500? 45%. I'm getting 23,625. Students, I'm getting 1,20,078. Let me recheck the total. 25,540 plus 34,976 plus 35,937 plus 23,625. So that's correct. We are getting this. I hope this calculation is clear to everyone. Yes or no, please reply. Number one, it should be clear to everyone. Second, I hope that everyone should have enjoyed this question. It's a bit challenging question. You cannot say it's a straightforward question. It's a bit challenging question, which required lots of application of different formats. And you have to be alert everywhere. Like we saw that, and personal allowance was 0. Personal allowance was 0. We also noticed that annual allowance from 40, it went back to reduced to 12,500. Then one more concept, a rule was applicable, that go 3 tax year back and check how much is available, use on FIFO basis. So within one question, if you be honest, we covered number of areas. And I would say a little bit at a higher side than taxation. So I would request, do attempt this question once again after the lecture, whenever you have time. And so far what we have revised, let me tell you, students, we have revised each and everything of the basic calculation. Number one, this is our 4th live revision class, if I'm not wrong. Every week I'm giving you 2 live revision classes, and this is the 4th live revision class. Number one, we have discussed all the basics, income tax revision, We have discussed exempt incomes, dividend income. We have also revised the property income. Yesterday, we revised the topic of NIC. Today, we have revised, according to me, properly the pension topic. Now, what is the agenda for the coming revision class? We are going to revise employment income. Employment income. And after the employment income, after the revision of employment income, I'll give you a proper planner that what should be done from before every revision class. Because after the employment income, we will be having a focus on revision. Along with that, attempting the Kaplan kit questions, obviously of the Finance Act 2023. So with the revision after employment income, we will be doing then revision plus the kit questions, so that when your revision ends, your kit will be completed, inshallah. And as I committed that you will get the live revision of entire taxation course. Entire taxation means entire taxation. And I hope you can see that we are covering, mashallah, every week number of topics. For that, I would say just watch the video once again. You will automatically get to know what should be the. See, I started from first, I check ANI. Why I calculated ANI? Just to check personal allowance. Will that person will get the personal allowance or not? Then I go for increase. Then step number 2, I increases the basic and high rate band. Then I applied the tax rates. After that, I went for annual allowance. Because even the annual allowance charge comes, so it will come at the end. There's no need to check that first. Got it? First, I checked, will that person is going to get, is he getting personal allowance? Yes or no? Second, I increases the basic and high rate band. And third, we applied the income, we calculated the income tax. And in the fourth step, we dealt with annual allowance. Is this clear? So student, please keep watching the lectures, of course, and please do not miss these live revision classes. Seriously, these live revision classes, they are the game changer. You can see that we have revised so many things. This class will be uploaded, I would tell them, within next 2 to 3 hours. Obviously, it takes little bit time. I'll ask my IT department to try to do it quickly as soon as possible. So students, thank you very much. Thanks a lot.